Hello traders, the title of the video is Financial Market Trader Reveals the Worst Enemy of All Technical Financial Traders. Do you want to know the worst enemy of all technical financial traders? Or do you want to stay away from that worst enemy of technical traders? Do you want to become a better technical trader in the financial market? All right. So in this tutorial, I will reveal to you the worst enemy of all technical traders, and you will do your best, to avoid, that mistake. All right. Let's get started. I have a real-time example here. The financial instrument that we are looking at is the FMC Corporation. This is an American stock, FMC Corporation, EPIC FMC, Foxtrot Mike Charlie. All right, it belongs to the basic materials sector, chemical. All right, FMC. Okay, as you can see on this chart, on Friday, the 3rd of April, so today is the on Friday the 31st of March. All right, so Friday was the 31st of March 2017. All right, and today is the 4th of April 2017. So Friday, the stock FMC gap up big time. The stock was in the region of $62, and it gap up, boom, here it is, went up all the way to the zone of $70. My friend, will you be ready to buy before this stock, gap up? All right. So those who bought it here are rewarded. Those who were selling, all right, they lost money. So you are using CFD or blah blah blah. All right, you are now out of your trade or margin. You receive some margin calls because the stock has gap up. So this is to illustrate one specific scenario that highlights, the worst enemy of all technical financial traders. So what is that worst enemy? So I will quickly talk more about the FMC. All right, FMC saw to the top of the S&P 500 on Friday, the 31st of March 2017, because this company, has swapped assets with DuPont. DuPont Nemours is another American stock. The EPIC is Delta, DD, DuPont Nemours, because this company has swapped assets with DuPont Nemours, and because of that, the stock has got a big time. All right. So for technical trader, let's see a little bit here what has happened for talking about technical analysis. So something has changed, that has created more value for this company, all right? So the stock went up big time, all right? And therefore the valuation of FMC, went up big time, all right? So the market capitalization of FMC rose from, 8.2 billion to 9.3 billion, all right, in one day. Boom, bah, finish, all right. But technically speaking, so as a technical trader, let's see what will you be doing at this point in time as a technical trader. So I have on my chart here, look carefully, I have on my chart the commodity period 14 on a daily chart. You can see that, let's put a line there, that Friday we were here. Careful, okay. We were here. So our CCI was here. So in fact, it was not bad signal for CCI traders because if you trade the chart pattern of the CCI, you can say that this is another thing I talked about recently, a clever CCI trading strategy at day pro traders. When the CCI formed a higher low, so there was this low, I talk about it, the traders that are following us at day pro traders will remember that video when I was talking to you about a specific CCI trading strategy where you have a CCI from a low and the second higher low is near the central line, which is the zero line. This is a bullish trading setup. So we have this bullish trading setup for the CCI giving us a warning. CCI, in fact, this is what some CCI traders call a leading signal. Look carefully. So here you can see that the CCI period 14 went up. This is what we call deviation from the central line. So the deviation of the central line is the deviation from the moving average 14, because we are using the CCI period 14. The deviation from the zero line for the CCI 14 is the deviation from the moving average 14. So if you do not understand what I'm talking about here, it means that you need to go quickly to dayprotrader.com and check every web page relating to commodity channel, or especially the page that are called the role of the commodity channel index, or the role of the CCI indicator. Check it out. All right. So because of the deviation, so CCI deviate from the central line, why the price did not move away. Let's put on my chart first the moving average 14. I'm going to use the simple moving average 14 instead of the exponential. Okay, here it is coming up, my friend. Here it is, and I want to use moving average 14 is now set at 50. Attention, please, traders. Hopefully, we'll do that nicely without too much trouble. Okay, just change it to 14, and I want to show you, technically speaking. So don't forget the main topic, the worst enemy of technical trading. I'm going into that topic now. So you can see here. So we are talking about CCI period 14 giving us a leading. Here it is. So CCI, you can see when we were here, the deviation occur. So you see this, zoom into it, traders say, just zoom into it. Here it is. This candlestick bar, we are on the daily chart. I'm going to move the vertical line onto this candlestick bar, so remember that. Here it is. So we were here. Okay, the CCI period 14 deviate big time away from the, okay, moving out from the central line. But look, the price did not go too far away from the CCI. This is what I call CCI discrepancy. Check that video also at DayProTrader, CCI discrepancy. So this is a leading warning to us that something is brewing. But now we will not trade the CCI itself, we will trade the price, waiting for a clear card invitation to buy. All right. Okay. So we have a pullback, another pullback here on the edge of the moving at 14. And if you are a patient a swing trader, you see you retest, here again you retest, people are buying along that bullish trend line. And finally, the warning that the CCI gave us here was here now. The deviation finally take place. Pew! But before that, the CCI deviate from the okay, central line, which is a kind of hidden divergence, because when the CCI deviate from the central line, the price should also deviate from the corresponding moving average. Here, moving average 14, but it did not. So we will not assume that definitely the price will deviate at one point, but we just keep trading it gently, and finally, boom, it went up. All right, so looking at the chart, traders that are using the CCI, there was a bullish signal, bullish trading setup, and also there is a bullish divergence that occurred here. It was not easy to trade because you can see that there is a resistance also here. So if we draw that resistance, you say, oh, John, there's a resistance there. I would prefer to buy above that resistance. So you will wait for your break above and retest. Here again, so the intersection between the horizontal line and also we have a small triangle giving us a warning. So there are many information here, a warning. So this is what I say to trade. Anytime you see a triangle, remember, it's a warning. So try breaks above that triangle and breaks above, retest. Here it is. You have a bullish trading setup above that resistance after the warning that the CC is giving us. If you position yourself and you are a little bit patient, boom, up. All right. So technical trader maybe in this trade. Lost some of technical trader definitely. Okay, a part of that trade. So you wake up the next day, you look at your trading account, you see this big money sitting there, you wonder what has happened. Now you want to find out what has happened. All right. So if you were on the wrong side of the market, which means you were selling because you were selling, which is not bad because there was some resistance here. Okay, so you were selling, right? Because you say, oh, George, there's a consolidation try to form here, I will sell at the top. All right, you ignore the warning given by the CCR, which you shouldn't normally. You ignore the triangle, you ignore the braceable retest, but you want to sell gently. If you control it, you may lose a little bit, but if you don't control it, you may lose big. Now, the most important thing is to control the risk. But the point I'm making in this tutorial, talking about financial market trader, reveal the worst enemy of all technical traders, all right, is this. So there is a scenario, a situation that has arisen. A company called FMC, all right, has swapped asset with DuPont Nemours. For those reasons, the valuation of that company went up big time, and the stock got up to reflect that change of fundamentals. All right, so the point I'm making here, very often technical traders do not bother to check the economy news. In fact, the worst, here it comes, the worst enemy of all technical financial traders is the surprise or the uncertainty. Right? Surprise and uncertainty. Most importantly, surprise. So you don't know, you don't bother about the technique, you don't bother to check the economy news relating to the financial instrument that you are trading. You are pure as technical trader. You are using your CCI, your MACD, your RSI. You are drawing your chart. You are using your market geometry. You are using your area wave, and that's all. You don't want to know anything. And suddenly, boom! This is what we are talking about. It's a big surprise. Price gap pop because you are not aware of the economy news. You are not going to Google Finance to check the economy news, okay, for the sector, so basic material. You will see if you go to Google Financial, relating stock relating, belonging to the same company, same sector, like FMC, what's going on. So probably you'll hear some story about DuPont Nemours and also FMC and, other stock that are also in the same sector. Probably you will hear about Dow Chemical because FMC deal occur as DuPont and Dow Chemical push back their merger date to August 2017 to allow for divestiture to proceed. So there are other companies that are involved, Dow Chemical and also DuPont Nemours, that have some influence on this stock, FMC. So the worst enemy of all technical traders is the surprise and the uncertainty. When one does not want to know about the technical analysis, what's going on in the world, in the sector, in the financial market, the economy news, okay, what's going on with the management, is there any litigation? This is the worst enemy of all technical traders. So this is a very good example that I want to show you today. So you can remember that if you are a day trader or a swing trader or a position trader, or you consider yourself as the purest technical trader, in 1 month you can see that in 1 day, all right, from on the monthly chart you can see we have a tall candlestick bar. Okay, so where are we now? Okay, for this stock. So again, technical trader will draw the line, so the price D below that key level $70 now is retesting it. So in this point, we'll say priority to bullish signal above the $70.46 and priority to bearish signal below that level. Again, brace the bow, retested around. So traders say, George, we always stay on a monthly chart. I'm a day trader. So from that line, we have that red line. We wait for the market to open and we trade around that key level. We know that it's a very important key level. We may go to the 30-minute time frame, see how the price hanging around here, and then we look for trading setup in the vicinity of a key levels. But the most important thing, or the takeaway of this video, is that if one considers oneself as a technical financial trader, one should also pay attention to the economy news at Google Finance, at Yahoo Finance, at Forex Factory, all right, and be aware of the economy news that may affect the price action. As you can see here, for the FMC stock, the stock gap up in 1 day more than 800 pips because of economy news. DuPont Nemours, that belong to the S&P 500, has swapped asset with FMC has swapped asset with DuPont Nemours, and also the FMC has pushed back their merger date with Dow Chemical. So Very important, as a technical trader, do not ignore the economy news. But the worst enemy of all technical financial traders is what we call surprise or uncertainty. In this case, it was a surprise for many traders. In one day, they see the stock gap up, they wonder what's going on. All right, all right. So they don't know what's going on. So even now on the let's go back to the monthly chart. I will show you again for the daily chart. The CCR did a very good job, but here on the monthly chart, you can see that the CCR is above 100. This is where a lot of traders get into trouble. The CCI above 100 is telling that the momentum is quite strong. It doesn't mean sell, but very often a lot of technical traders will be busy selling just because the CCI is overbought. The CCI overbought does not mean that the financial instrument itself is overbought. This is one thing also one should work on. If you want to learn to master the CCI indicator, subscribe to Day Pro Trader YouTube channel and watch every playlist about CCI trading there. All right. So this is the end of this tutorial about the financial market trader reveals the worst enemy of all technical traders. The worst enemy of all technical traders is the surprise, the uncertainty that occur if one is not combining the technical analysis with the fundamentals analysis. All right, one can become a better technical analyst if one is combining the economy news, the fundamentals with the technical analysis. One should not trade the technical indicators alone. One should combine the technical indicators warning with the price action plus the market, the trading triangle, the market first, the sector, before the individual financial instrument, the heart of the trading triangle, the market leaders, the economy news, and the fundamentals. If you have any question or suggestion, please feel free to put in the comment section, and of course, I will be recording another video to answer your specific question. We are the TSTW24 traders talking about financial market trader reveals the worst enemy of all technical financial traders. Happy trading to you all and speak to you soon.